Hello student, welcome in online classes Rishikul Vidyapeeth. My name is ONKAR TYAGI and in this module I will teach you 11th accountancy and first chapter meaning and objective of accounting. So what is the meaning and then after that features and then objectives of the accounting. One by one I will teach you. What is accounting? First question is what is accounting? Accounting. Every business, either it is small business or large business, or you can say every businessman, they want to know after a certain period how they earn and how they lose. So they do some business and what is they invest in the business, that is capital, and then they do the work, they do the business, and after 1 year or after a certain period they want to know what is the happening in our business, what we have to pay, what we are gaining, what we are losing. So it is the important question and arise in our mind, and without knowing the exact reason of profit or loss, we can't survive and we can't go ahead. So in business, every business, we want to know how we earn the profit and how just we make the record of the business. In business, we do some activity, economic activity, and we purchase something and we produce the goods, then we sold that good in the market, and then we recover the money from the market, from the debtors, from the various parties, and how we meet the expenses with the income and how we calculate the profit. So it is very simple. In everywhere, in our house also, we have the record, we have the proper system. For example, I have the pocket money and how much I spent and how much I save. So everything we record in a systematic way and find out the results and find out the profit or loss, and we want to know what is the happening in our business. So हिसाब किताब रखना एक तरह से, कोई भी बिजनेस है, छोटा बिजनेस है, बड़ा बिजनेस है, उनको हिसाब किताब रखना पड़ता है. अगर वो हिसाब किताब नहीं रखेंगे तो they can't survive, even they can't run the business. So first of all, I just want to tell you how they record the transaction in systematic way, and so many questions arise in our mind. What is our total expenditure? What is our total income? How much assets we have? How much amount we have to pay to outside? Sometimes we take the loan also, and sometimes we purchase the goods from the various party, and how much money we have to pay to the various parties, and sometimes we sold the goods to different party on credit, and how much amount we have to receive from that party. So all transactions, these are the transaction events, business events, give and take, लेन देन बोलते हैं इनको. We can't, you can say, memorize these things because our memory is limited. And we record these transactions in a systematic way and find out the result that called accounting. So one by one I will just explain. First of all, what is the exact meaning of accounting? Accounting is a art or a science where we record the financial transaction and classify them and summarize them and interpret the result and communicate the result to the various party, that called accounting, the simple meaning. Now question arises, what is the characteristics of accounting? One by one I'll explain here. First characteristics of accounting. First characteristics, accounting is an art as well as a science. science also. So what is art and what is science? Art means application of knowledge, or you can say when we do the work with efficiency, that is art, and it is purposeful. In accounts we prepare so many reports, so many statements, and this should be purposeful and give the proper result, that called art. And accounting is based on some principles or some rule and regulations, that called science. Science is the body of knowledge where cause and effect relationships are there, that called science. So accounting is an art as well as science. It is clear. So in accounting we just we can say both qualities are there, art and science. Second characteristics of accounting is recording of financial transaction only. What do you mean by financial transaction? Financial transaction means which affect our finance. For example, we purchase something, we sold something, we pay something, we receive something. That are financial transaction. But our purchase manager is a very honest person, but we can't record them because it is not a financial transaction. If there is a fighting or quarrel between the production manager and sales manager, we can't record it, but it affects the business, but we can't record them because they are not a financial transaction. Only financial transaction we record in accounting. Second one is third recording of transaction which are measured in terms of money. For example, it is our business, and our business is a trading business, furniture trading house. We purchase 500 chairs. Only 500 chairs, there is a quantity, but rate is not given. So we can't convert these 500 chairs in a proper amount. So we can't record in accounting. In accounting, the transaction, the event should be measured in terms of money. Either it is rupees or pound or any other currency, but it should be converted into money. If only quantity is there, rate is not there, if we can't just measure in terms of money, we can't record, and so it should be converted into money. It is the feature of the accounting. Next one is fourth point, that is, before fourth point I want to recording means to write in a systematic way, and it just record, you can say journal entry, or you can say subdivision of journal. If business is small, only journal entry is enough. If business is large, journal entry and journal book become very bulky and heavy, and it is not possible to contain all transactions in journal book. Then we divide that journal in different books. They are called, you can say, subdivision of journal: cash book, purchase book, sale book, purchase return book, sale return book, bill receivable book, bills payable book, and journal proper. So we can divide these. These are also recording. Recording means लिखना, अच्छे से record करना, systematic way में लिखना किसी चीज को. That is recording. So journal entry or subdivision of journal. Now I come the next point, that is classifying. Classifying. That is fourth point, classifying. What is classifying? Classifying, when we record the transaction in a systematic way in different books or a single book. If business is small or business is large. If business is large, it divided in different books. If business is small, it is only a single book. That is journal book. But in recording, we record the transaction in a systematic way, date wise in a chronological order. But here we can, you can say in classifying, we find all transactions at one place in a proper manner, that called classifying. And here we prepare the ledger, and all accounts are open in ledger book, and all journal entry or original entry are recorded in ledger at one place according to their nature. For example, purchase account, sales account, building account, capital account, rent account, salary account. So all transactions, you can take the example of salary. Salary is given monthly salary, and month-wise salary you find in the ledger. All entry will be there. So in a chronological order, in a systematic way, we find all transactions in a systematic way, classified according to their nature in ledger. That called classification. So classification very important role, and ledger have the all type of accounts. Either these are subsidiary books or cash book or from journal book. All will be goes into the ledger. Then after ledger, after classification, next point, that is summarizing. That is summarizing. What is summarizing? Summarizing means in ledger all books, all accounts are opened, and we make the total and find out the difference, closing balance. Sometimes closing balance will be nil, sometimes it may be debit, it may be a credit. It depends upon the accounts, nature of accounts. So we can say how much expenditure incurred, how much income we receive, how much purchase, how much sales, and you can say how much amount we have to pay to the party, how much amount we have to receive from the party. All question answer will be you can say given with the help of ledger, and ledger will be summarized in a proper way, and here we make the balancing, and that balance put into the trial balance, and here trial balance will be will be prepared, and trial balance is the account. Here debit and credit, all debit and all credit should be equal. All accounts are put here, and it is a arithmetical accuracy of the accounting of the recording of the transaction. So we prepare the trial balance, that called summarizing. So after summarizing, we can say how we calculate the net profit with the help of trial balance, that called interpretation of the result. Next point is interpretation of the result. Next point is 6, interpretation of result. Result means net profit, net loss. Net profit or loss. We discuss about profit, but loss is just understood. It is positive, it is negative. We think about profit. So net profit and loss we calculate with the help of trial balance. First we calculate the trading account, prepare the trading account and find out the gross profit. Then we prepare the profit and loss account and find out the net profit. After that, at the end of the year, we prepare the balance sheet, and it shows the financial position of the business. So these are the result: GP, gross profit, NP, net profit, and financial position. GP के लिए क्या बनाते हैं? ट्रेडिंग अकाउंट. ग्रोस प्रॉफिट के लिए, नेट प्रॉफिट के लिए क्या बनाते हैं? प्रॉफिट एंड लॉस अकाउंट. और फाइनेंशियल पोजीशन जानने के लिए क्या बनाते हैं? बैलेंस शीट. These are 3 accounts. trading account, profit and loss account and balance sheet. They interpret the result. They tell us what is happening in business. We are in profit, we are in loss, what is our position, what we have to pay, what we have to receive. All things are, you can say, know with the help of these account, that called interpretation of the result. And last, that is communicating of the result. Communicating. 7th point, that is communicating. Communicating the result. When we interpret the result, then we communicate to the various party, internal user and external user. If within the organization some parties are interested in our financial transaction or financial result, that called internal user. Internal user like manager, owner, these are the internal user. If other party outside the business, they are the external user like supplier, bank, potential investor, researcher, media, or other any parties, government. So these are the external user. They can use the information. They can use our information. They are the user. So we can communicate. We prepare the balance sheet. The balance sheet is just like a notebook, and it is printed, and we give to a various party according to their need, like bank, government, income tax authority. Everywhere we provide the financial result. It may be audited or unaudited, whatever. So these are the characteristics of the accounting. Now, one by one, I discuss the characteristics. Now, I want to tell you the accounting cycle of the business. So, the accounting cycle. What is the accounting cycle? Accounting cycle. This is the cycle. Here, transaction means give and take, events. Whatever happening in the business, it is a financial nature. In terms of money, that is transaction. For example, we invest the money in the business, that is transaction. We purchase some goods, it is transaction. We sold that goods to the party, it is transaction. We paid the salary, it is transaction. Commission received, it is transaction. We deposit the money into the bank, it is transaction. We withdraw from the bank, it is transaction. So this is the transaction. Then we prepare the journal entry. Next step is journal entry. After journal entry when we record all transactions at the first time, that book called journal entry, and chronological order according to time we record in the journal entry. After that we prepare the ledger. Ledger means classification of the, this is the recording, this is the classification. You just learn earlier what is recording, journal entry, and it is classification. After preparing the ledger, we prepare the trial balance. Trial balance, that is summarizing. Recording, classifying, summarizing, and this is the result. Here we prepare the final account, that is trading account, profit and loss account, and balance sheet. So these are three, and these are called final account also. These are final account. So transaction, then journal entry, then ledger, then trial balance, or then trading, profit and loss, and balance sheet. So this cycle is called accounting cycle. If transaction is more and business is large, heavy industry is there, then we divide the transaction in different parts, that called subsidiary books and original record of entry. First, that is cash book. Second, that is purchase book. Third, that is sales book. Fourth, that is purchase return book. Fifth, that is sales return book. Sixth, bill receivable book. Seventh, bills payable books, and 8th journal proper. Journal proper. These are the 8 type of books. If our business is large, then we adopt this system, subdivision of journal. If our business is small, proprietorship, no so much transaction, then we use the shortcut. Transaction, journal entry, ledger, trial balance, that is final account. If our business is large, we divide the journal in these 8 parts. These are the books of original entry or subdivision of journal. So we record, and after division of these, we prepare the ledger with the help of these 8 books. And after ledger, then prepare the trial balance and then prepare the final account. So this cycle is called accounting cycle. Next one is objective of accounting. Objective of accounting. First objective, to keep systematic record. First, to keep, that is the objective, systematic record. Accounting have the first objective to maintain the accounts and to keep the systematic record of the financial transaction. Systematic means there is no problem, everything according to rule and regulation, and system according to system. No hodgepodge, neat and clear, true and fair. You can see each accounts, what we have to pay, what we have to receive, each item recorded in a systematic way. It is based on rules, it is based on the journal rules, personal, real, nominal, and then find out the result. Second objective is our to calculate the profit and loss. Second objective, to calculate the profit and loss. What is the profit and what is the loss? We can calculate with the help of accounts. If we have the proper accounts, what we invest the money, what is our functioning. For example, our business is a manufacturing business or a trading business or a service industry. What type of business we have and what is the profit and what is the loss? We can know the exact answer with the help of accounting. If we have a proper accounting, then we can find out the net profit or. Now I will take the third point, that is to know the exact region. Third point, to know the exact region of profit and loss. So in objective, with the help of accounting, we can find out the exact region, what is the exact region of profit or loss. If there is a competition in the market, and if there is a, you can say, strike of the transporter or power failure or labor strike, that is the reason. If we are suffering the loss, if we are earning a maximum profit, because in the market we have the monopoly, no competitor is there. So with the help of accounting, we can know each and everything, and we can find out the exact region of the profit and loss account. So without accounting, we can't find out it. Next one is point number 4, to ascertain the financial position. To ascertain the financial position of business. We have a business, and if we have the proper accounting and we record all transactions in a systematic way, at the end of the year we can know the financial position of the business. Our position is good, our position is not good, we are in debt trap. What type of position we have? Our assets, our liability, we can compare them and we can find out the exact position, our position is good or bad. So with the help of accounting, and it is our objective, we can ascertain or find out the financial position of the business. Next one is to prevent and detect the error and fraud. To prevent and detect error and fraud. What is error and what is fraud? Knowingly fraud, unknowingly error. Error are excusable, fraud are not excusable. So, with the help of accounting, we have the proper auditing and we find out the error and mistakes and frauds, and we can prevent and detect the things. And just prevention is better than cure. So, we have a proper recording. So, there is a less chance of fraud or error, and we have a systematic record. So, it is the objective of accounting. Next one is to provide the information to the various parties. To provide the information to the various parties. To provide information to various parties. Party, two type party, internal or external. Within the organization, that is internal. Outside the organization, that is external. For example, in internal, owner, manager, and external, supplier, or you can say creditors, bank, potential investor, government, researcher, tax authority, media person. So these are the external users. They can use the information with the help of our accounting. If we properly maintain the account, then we give the information to the various party. Next one is last, to ascertain the progress of business year to year. To ascertain the progress of business year to year. What is our growth? Our profit is increasing or decreasing. What is the trend? Like this, like we are suffering the loss, our profit is downfall. So we can understand with the help of proper accounting what is happening in the business. So we can ascertain the progress of the business year to year if we have the proper accounting, we maintain the proper accounting. So in this module, we'll learn characteristics and objective of accounting, and I think you like it and you can understand each and everything. Thank you. Have a nice day.